Yes, sir,
Okay,
we can
sure.
hear you.
So,
Yeah.
let's start then.
Yes, let's start.
Okay. Assalamu alaikum. Good afternoon, Adab. My name is Faheem Sardar. I'm here to talk about the COVID effect on financial markets and how that has a panic syndrome to it, attached to it. So, very quickly, a brief background about myself. I very recently, on the 1st of April, joined the government of Pakistan at the policy level. So, I'll be dealing with a lot of policy issues. Prior to that, I was the managing director of Tangent, which is a hybrid, which does think tanking as well as corporate advice. Prior to that, I was the CEO of Askari Securities Limited to for 9 years. I I'm supposed to increase the volume, which I'm trying. Can you hear me? Can you hear me? Voice is not clear.
I can hear you, but very softly.
Hang on a second. How else can we increase the voice? Is this better? It's okay to.
I think if you could come a little closer to your laptop.
Hang on a second. Can you hear me now?
Yes, much better.
Is it better?
Yes, better.
Okay, sure. So I was just giving a brief background about myself to um, I've had a bit of experience with the government at the beginning of my career, and then I've been with the private sector for a long time. But today we're going to talk about financial markets and how they are reacting to the coronavirus and how that is basically giving rise to a panic situation. I'm on YouTube, Facebook, Twitter. I've talked about these things before, and I'll just try to summarize many of these things today. The first question is, what is the coronavirus? I'm not an epidemiologist. I'm not a biological expert, but one thing I do know is that we've never seen anything like this before. And this thing is so strange that we have never seen a virus that can be global at the same time. We have seen Ebola, we've seen SARS, we've seen MERS. We Pakistanis have seen dengue, which I'll come to at the end of our discussion. But I have to say that this thing is extremely strange. Now, why do we need to focus on these points? Because this is giving rise to our second point of today's discussion, which is panic. Now, let's go back to financial markets. We all know that the investor is possibly the least heroic person on earth. You see in movies a hero, you don't see too many heroes in the financial markets. With the slightest bit of tremors, slightest problem, you see investors going here and there. You've seen it on very small issues. So Corona is far bigger. So we have to understand that the financial markets are extremely sensitive. They are, I actually have, I just got a message that I'm supposed to increase my volume. I have tried to increase the volume to the maximum. Can you hear me, or is there still a problem? Nadia, can you hear me?
I can hear you fine. I hope everyone else can hear you.
I just received a message we should increase the volume. I've tried,
Okay,
some people can hear
they're
me
saying
now.
it's fine. They're saying it's fine.
Okay, so we'll go forward. So basically, financial markets are extremely sensitive, and based in financial markets do respond to these events in very drastic manners, something that we've seen very recently as well. As I said, I've spoken about this on TV, and those programs are available on YouTube. Let's be honest, financial markets are panicking, and let's look at numbers. There have been moments of free fall. There have been moments of recovery, which I'll come to very shortly. But we have to bear one thing in mind, that financial markets may be in free fall, they may be very sensitive, there may be issues, but someone has been buying. Someone has been purchasing Chinese, American, European shares. That is something which we must never forget, because this is an opportunity as well for many. COVID has apparently wiped out all the gains that the incumbent US president had brought into the US stock market. So that may be beyond 10 trillion. Some say it's 13. I won't quote a number, but I know it's beyond 10 trillion. All the governments are scrambling to save their markets, their economies, and it is very easy to understand that, because A, economies are in a pause. B, you look at the monetary easing of all of the major economies, Pakistan included. On 3rd of March, the United States Federal Reserve reduced its policy rate to 1 to 1.25%. So basically that they were signaling to the market that more money will be available. The EU, the US, and other countries, including Pakistan, have entered into stimulus programs. They have entered into a panic situation, to be very honest, that unless the economy is strengthened, unless there is more support brought in, there's going to be a very severe depression coming our way. On the 2nd of March 2020, the OECD basically gave its report, and it said that at that time, they were saying the markets will grow at, the globe was supposed to grow at 2.9%. But then they said, no, we have brought it down to 2.4%. I think it's going to be much worse, because you are going to see negative growth in many major economies. So when we look at specific markets as a barometer of what's happening across the earth, and I'll just give you the time frame. What I did was, I'm looking at the time frame 1st March to yesterday. Yesterday was the 4th of May. Why 1st March? Because that's when you really started to see more cases of COVID. That date I've taken from the WHO. So when we look at 1st March to the 4th of May, this is what we've seen. The Dow Jones is down 8%. NASDAQ recovered to a change of 0%. S&P is down 5%. FTSE is down 13%. The German DAX is down 12%. Japan's Nikkei is down 7%. Hong Kong's Hang Seng is down 10%. And our good old Pakistan Stock Exchange is down 11%. Here I have to say, और हमें ज़हन में रखना पड़ेगा कि दरमियान में there has been a slump. So there has been a recovery. If I were to take numbers from a slightly older date, let's say 2 weeks or 1.5 weeks, so you would see worse percentages. NASDAQ recovered quite considerably, which is interesting. So the markets are panicking. Going forward, let's just not look at the stock market. Let's look at other related markets. So two come to mind. We don't have time to get into all the foreign exchange markets and this and that. But two markets we have to talk about immediately, one of which is the oil market. The second is the gold market. Before I proceed, can you guys hear me?
Yes, we can hear you. Perfect.
Okay, excellent. So we look at two other markets in tandem with the stock markets. So oil, we'll start with oil. Oil futures, not oil itself, oil futures in the United States were negative, more than negative $30 because storage capacity nahi thi. Right now, if we take the same period, 1st March to 4th May, oil has come down, and I'm not talking about the US futures, I'm talking about the normal traded crude. I'm not talking about Brent. it has come down 53%. That is in part due to the Russia OPEC problem, more so Russia Saudi issue. But at the same time, there is a total fizzling out of demand across the earth. Why? Because economies have paused, not stopped, they have paused. There is no storage capacity left. VOPAC, which is one of the largest oil storage handlers on earth, they're from Holland. They said capacity has been reached. There is no other place to put oil. Now with the result that you've got thousands of tankers on high seas, near coasts, they don't know where to berth, where to, well, get rid of their oil, to deliver their oil. Now, if you take into account the fact that all the economies have been virtually paused, demand has gone down. There will be very little consumption. Subsistence consumption is what's happening right now. So the economies have to not only get back on track, but now that's bringing me to the next point, which we're going to start very shortly. It's the psychology of the whole situation. Gold. Now, what's interesting is that in the same period, when we take 1st March to 4th May, gold has increased by 10%. It is above $1,700 per troy ounce. Now, the psychology of a market, the psychology of an economy, your psychology, my psychology. Let's just briefly talk about that. What is panic? Panic is, har ek ki apni definition hogi yakinan, but I guess I would define panic as overwhelming fright, which makes you decide differently. So right now, panic is a natural outgrowth of what's happening right now. Right now, there is something called a disease, whatever you want to call it. There is apparently no control over it. There's no handle on it. Its description keeps changing, and the threat is still there. So that is inducing a lot of panic. Now, partially that is true, partially that is untrue. Why? Because of our old enemy, noise. Financial markets are proxies of the real economy, so they are linked. You cannot segregate the two. If the financial market is going down, as I have described, if the commodities market is upset, like oil is coming down, gold is spiking, it's upset. So that means there is something not right. The psychology is not in its right place. Here we come to what I believe is the crux, in which I think might be a central point to this webinar, which is we have to understand that this virus, we have to look at facts, and we have to realize that this panic can be much worse than the virus itself. And that's exactly what's happening right now. People are panicking, and I would like to present some more facts which sort of negate the noise that we hear. If there is so much panic in the market, then who's been buying across the globe? Someone has been buying. So it's important for me, and of course you, to understand that every situation brings an opportunity. You have to avail that opportunity. People were calling me up, although I joined the government, friends were calling me up, what should we do in the stock market? I have a lot of experience in the investments industry. So I said, buy. They said, shouldn't we sell? I said, no, you should buy because the market is going down. So someone has been availing this panic, this problem, as an opportunity to build their own portfolios. So coming to the end of my brief discussion, telling you about problems, describing them beautifully is not the purpose of this webinar. That's part of the purpose. The purpose is also to provide a solution. The company that I was running, Tangent, is providing solutions to people in the COVID scenario. If you'd like, you can go to the website. It's tangent.com.pk. Trying to help businesses, and we need to help ourselves. How do we do that? Number one, focus on facts, not noise. It is amazing how quickly the human mind can adopt a different decision path based on noise, based on nudging, based on certain threats. And fear is one of the biggest motivators in a bad way. Number one, focus on facts, not noise. Focus on the fact that Allah ke rahm o karam se, Corona has not been as bad in Pakistan as it has been in other countries. Focus on the fact that we have, and let's admit it, we have taken on the panic of the West, and we've started to project it in our own country. Is Corona not serious? No, I didn't say that. All I'm saying is that we've taken the panic of the West, and since the West is panicking, we also have to panic. So it's, I have my own opinion on that. Let us focus on facts. Let us focus on the recoveries. The recovery rate in a COVID situation is beyond 95%. Some say it's 97%. I will not debate that issue. I'm not an expert. But to have a virus, a threat that has a lethality of 3%, I think I should revisit what the real threat actually is. The real threat is up here. It's not the virus itself. This is an opportunity. One should audit one's own self, one's own mind. How do we think? How do we go about things? What is our policy of life? I've said this again and again, and I practiced this, especially when I was at Askari Securities. Prepare for any eventuality. When the going is good, prepare yourself for something bad, because something bad will come at some point, and those who are prepared will always have a less of a bump than others. Consider this an opportunity to learn something. Consider this an opportunity to build your own business, your own your self-sufficiency financially. The new concept of being financially independent. Use this as an opportunity to plan that out. And finally, I want every one of us to not only remember, but remind ourselves and point this out to our friends in our circles that the economies have paused, not stopped. So there is a panic syndrome, to wrap it up. There is a panic syndrome, and panic is basically a function of certain facts, lots of noise, and a lot of our own dispositions that we think are going to happen. This is an opportunity, and as I've said, I'm saying this for the third time, some organizations are using this as an opportunity to build their portfolios. So with this, I would like to thank you for watching this webinar. I want to thank PICG for this opportunity, as always. And if there are any questions, I'd be happy to address them.
We've got one question at the moment. This is from Mr. Mohammed Ziaur Rahman. How uncertainty due to corona panic is going to affect the status of dollar as an international currency? Will it give rise to independent currency zones in the world, as has been indicated recently by the Chinese decision to use yuan as a medium of exchange in certain parts of world trade?
Okay, I think that's a very question. It requires a detailed answer. I'll try to give a concise, crisp answer to this. I guess we don't have that much time. The US dollar is basically, it's a phenomena. The British pound was the same thing when the British Empire existed. When the empire collapsed, the pound collapsed, and the pound was restricted to England only. So the US currency, which is used as a reserve, it may come into question. It may. Now, why would it come into question? Because right now you have to see that what is backing that currency? Basically, my faith in that currency, nothing other than that. And that is, I think, one of the weakest assets one can live with in the financial market. So there is a high probability that the currency status as a reserve will be challenged. The Chinese yuan it's being pushed to a global level, understandable. But we can also see that the simultaneous degradation of many economies will, in fact, delay this change in paradigm. So it might happen, but let's see how things pan out in the next 3 months.
The next question we have is from Mr. Jibran Ahmed. He's saying, any views on the USD Saudi Riyal peg?
Oh, that's interesting. The Saudi Riyal peg is based on the oil peg, to be honest. And we have to, once again, see how OPEC is going to respond to the US push that they have to cut production. The US Saudi Riyal, obviously they're pegged to each other with oil as a lever, or I would say as a balancing tool. But we have to see, once again, because everything has become so fluid that everything has become so fluid that, I mean, we have to see what the future peg will be. I mean, now let me be the devil's advocate here. To see the Saudi Riyal rising against the dollar, there's a limited chance of that. To see the US dollar rising against the Saudi Riyal based on the issues that they're facing in the international market, there's I think there's a less chance of that. Of course, there will be a readjustment, and I think you will be able to see that readjustment by the end of May.
I think that's it. Okay. Luqman Nadeem is asking, do you think that the US market's rise is temporary?
Luqman sir, welcome to the program. Good to see you here. The US market's rise, okay, one thing I didn't mention here when I was talking about the markets was the volatility. I did not bring that into the discussion because I was trying to keep it very short. The markets have become extremely volatile. And if you see, for example, the NASDAQ at zero change in the period that I said 1st March to 4th May, that does not mean everything is all well. I do believe the markets are extremely volatile still. If something else were to happen right now, if, for example, let's be honest, if the US tries to put more pressure on China and there's a trade war ensues yet again, if the agreements that they had agreed upon, the trade agreement, if that's not fulfilled, you can barely see the markets going absolutely haywire. And I think that's once again a very, very interesting question, and sorry to not give a very positive response, but the markets are weak, the markets are volatile, and the situation is fluid. So when you put these three together, you've got a Molotov cocktail.
So we've got quite a few more questions in, but we're also running out of time. So what we'll be doing is, if there are any other questions, we'll be sharing the answers via email. And let's call this a day then for the time being, inshallah.
Thank you, Nazia. Thank you all for taking time out, and hope to see you again.
Thank you, everyone. Thank you for being part of the program. Okay.